Today we will talk about a small-cap Nordic stock that quietly doubled in the first quarter of 2025. Many people think that if you want to find a doubling stock, you must focus on the US stock market, A-shares, or the popular AI and semiconductor sectors, but in fact, some opportunities that can really bring several times the return are often hidden in markets you are not familiar with. Today, we are going to talk about a potential stock from Northern Europe Norse Atlantic ASA, stock code Norse, a low-cost long-haul airline in Norway. The company's stock price in the first quarter of 2025 rose from 0.7 Norwegian kroner to about 1.5 kroner, quietly doubling, but the market's attention is still very low. So let's dig deeper today. Why can it achieve this growth? Is there room for it to continue to rise in the future? Is it worth our ordinary investors' attention? So what is Norse Atlantic? Let's briefly introduce this company first. Norse Atlantic is a low-cost airline founded in 2021, headquartered in Oslo. Its main business is transatlantic routes, such as long-distance routes from London to New York and Oslo to Miami. It adopts the low-cost airline business model, but only operates one type of aircraft, the Boeing 787 Dreamliner, which means that it is very efficient in operation. This company is a bit like a transoceanic version of Ryanair. It uses low-cost and simplified operations to enter the long-distance market with higher profits of traditional airlines, targeting those price-sensitive but frequent business or travel passengers. Then why did it quietly double in Q1? In summary, there are 4 core factors behind this round of increases. 1. Strong recovery of the aviation industry, plus explosion of long-distance travel. Starting from Q4 2024, global air travel will enter a period of rapid rebound. In particular, the transatlantic route from North America to Europe has become one of the most popular routes in the world. According to IATA, International Air Transport Association, the number of passengers on transatlantic routes has recovered to more than 115% of the pre-epidemic level in early 2025. Norse's business is centered around this area. Its route resources are very accurate, and its main features are low prices, direct access, and comfort, which corresponds to the dual needs of passengers for cost-effectiveness and efficiency after the epidemic. 2. The cost structure is extremely simple, and cash flow has improved significantly. Unlike the complex aircraft models and human resources systems of traditional airlines, Norse Atlantic only uses Boeing 787, one model, one maintenance system, and one flight training process, with extremely high operational efficiency. Moreover, it focuses on online direct sales, with low sales costs and basically does not rely on the agency system. Starting at the end of 2024, the company will gradually achieve positive cash flow operations, which is a huge milestone for a startup airline. 3. The surge in U.S. airline stocks has driven attention. You may not have noticed that since the beginning of 2025, airline stocks in the U.S. stock market have also performed well. For example, JetBlue, Spirit Airlines, and Alaska Airlines have all risen by more than 20% in January and February. Global funds have reheated their attention to the aviation sector, and many investors with a longer vision have begun to look for catch-up targets in the international market. Norse was just discovered by some European and U.S. stock funds, and the proportion of institutional holdings increased significantly in Q1. 4. Cooperate with large travel platforms to open up customer acquisition channels. Norse's recent positive move is to establish in-depth cooperation with global OTA giants Expedia and Skyscanner and promote its ultra-low fares, plus comfortable seats, transoceanic routes on the platform. This means that their customer acquisition ability will change from the original active search to platform exposure, and the order volume will increase exponentially. This light asset plus channel outsourcing plus platform sales model is very rare among European airlines, which also shows that Norse is not only an airline, but also a platform route service provider. At this point, many people will ask, Is there still room for it to rise in the future? We can't just look at the past increase. What's more important is whether there is potential for continued growth in the future. My judgment is yes, and there is a lot of room. The reasons are as follows. 1. The current valuation is still low. Although the stock price doubled in Q1 this year, the current total market value of Norse is only about 300 million euros. According to the latest revenue forecast, its revenue in 2025 is expected to exceed 400 million euros. According to the 10-12 times PE estimate of the aviation industry, there is at least 30%, 50% room for growth. 2. Route expansion is still accelerating. Norse currently has about 10 routes, but according to the company's plan, it will expand to more than 15 routes in 2025 and open some direct routes to the Middle East and Asia, which will further increase the occupancy rate and fuel efficiency. In the aviation industry, route density and network coverage directly determine competitiveness. 3. The entire sector is in the valuation repair stage. After the epidemic, the aviation sector has been underestimated for a long time, and now the market is slowly repairing this prejudice. In particular, the high-profit characteristics of long-distance routes have attracted many capitals to enter the market. Although Norse is small, it has the advantages of light assets and high efficiency. Once there is a wave of industry acquisitions, it may be one of the preferred targets for mergers and acquisitions. Now let's talk about its risk points. For rational investment, risks must be made clear. 1. Oil price fluctuations. Airlines are extremely sensitive to oil prices. Although Norse has some fuel hedging strategies, if oil prices rise sharply in 2025, it may affect profits. 2. Geopolitical risks. Transoceanic routes involve multiple countries. If there are problems such as route interruptions and visa restrictions, operations will be affected in the short term. 3. Small-cap stocks are highly volatile. Small market capitalization means large stock price fluctuations and are easily affected by daily trading volume. Suitable for patient medium and long-term holders, not suitable for frequent short-term operations. Okay, now let's make a summary. Why should you pay attention to Norse Atlantic now? The recovery of long-distance routes has accelerated after the epidemic, and the company's entry angle is accurate. The model is light, the cost structure is excellent, and the cash flow has improved significantly. The cooperation platform has enhanced exposure, and the performance has great potential for explosive growth. The current valuation is still low, and the market has not yet fully discovered. If you are interested in this kind of low-base, high-explosion growth small-cap stock, welcome to follow my channel. I will continue to share hidden gems in the global market that are severely undervalued but have great growth potential, helping you seize the opportunity to double your money as soon as possible. Don't wait until it becomes a stock that everyone is talking about before you start researching it. The real investment opportunities are often hidden in the moment when no one is paying attention. See you next time.